A lot of people have rushed to precious metals, and as a safety net, um, that's not that that's certainly an option for people. The challenge, like anything with any investing, is timing, right? If you look last year, gold I think was 28%. Year to date in 2025, it's up I think around 40%. So if you were smart enough to make that decision when the market was going gangbusters to allocate some money into precious metals at the end of 2023, you might have been okay. The big question is when. When do you buy and when do you sell? And so it goes back to what I like to call behavioral finance and investing, and that is, are you able to make smart decisions and counter correlate assets not only in an asset class but also from a timing standpoint? If you look at gold historically, though, let's go back and kind of look at what it offers. It is a hard asset that you sit on it and you're hoping at some point to sell it for some sort of value in the future. Completely different than real estate, which, as you know, Ty, provides a number of different benefits and historically over time has performed much better than gold if you look at some of the factors that make up real estate investing. So I would say gold is a portion of that portfolio. What I'm seeing from the advisor community as a large is less and less focus on promoting precious metals or gold as a counter-correlated asset, and getting into some sort of alternative investment is becoming much, much more mainstream. We recently saw the employer-sponsored retirement plan market, huge multi-trillion-dollar market, where alternatives have, and even gold, to be perfectly candid, has really been something that hasn't been available because people look at it as we need to offer something that's safe and secure for the participants in these plans because you might be acting as a fiduciary. In the past year, alternatives have become much more mainstream. Some of the largest providers, Empower, I think, is the second biggest record keeper in the country, has recently approved alternatives in their platform because they see the value that alternatives, and specifically real estate as an alternative asset class, can bring to investors, not only as a hedge, but as a great way to grow their portfolio in the future.